So before break, we talked about the costing methods of weighted average method, FIFO, and LIFO. So let's just talk about its illustration. So please take a picture. I'm going to be setting up the breakout room, and all you need to do, so this is a group classwork. Let me, so please take a picture. I have set up 3 breakout rooms, and this is the class assignment, in-class assignment. And I would be expecting 3 pictures in 10 minutes. Okay, after 10 minutes, I will be closing all the rooms. So please find out the average ending inventory and average costing, cost of goods sold, and then FIFO, and then LIFO. Okay, here we go. So those who are watching online, so for them, I'm going to be pausing video here, and I will be resuming once we finished the breakout room activity. Okay, so I have received your files. So let's just compare the answer. So this is the data that we have: beginning inventory, and we have March 3rd, March 17, March 23. So we have also added its total cost, the number of units here. So according to the question, so 318 tents are sold, 52 are our ending inventory, right? So if we apply FIFO, first in, first out. So what would be our, average method? Sorry, not at FIFO, this is average, my bad. So on average, so how we can find out the average? So we add all the cost of goods sold at all the units, we divide it, we find out 18.77. So you multiply it. Sold units are 318. So 318 multiplied by 18.7, that would be our cost of goods sold, and ending inventory going to be 52 multiplied by 18.7, right? Okay, now FIFO. First in, first out. So we sold 318. So first in, first out. So first in, 75 units. We sold 318. So we need to fill up to 318. So here we go. So first 75 units going to be sold, and then 95 units, and then 148. So among this 165, 148 units, so we sold it. So total cost going to be, you add it, is going to be 570. And among 165, 148 we sold. So it means 35 plus the rest of them is going to be our ending inventory. So our ending inventory is going to be 1075. Right?
Yes.
For LIFO, let's just, for the time being, just remove it. This is LIFO cost. So what is LIFO? Last in, first out. It means latest prices going to be added to fill up this 318. So 35 units going to be all sold, 165 going to be all sold, and then 95, and then 23 among 75. So all the ending inventory is going to be based on this 16, right? So 52 multiplied by 16, answer is going to be 832, right? So this is your ending inventory of LIFO basis. So what we have got here, so this is the inventory, FIFO, average costing, LIFO, right? These are the inventory here. So you see here, average falls in between the LIFO and FIFO. So average costing inventory is 976. LIFO will give you $832 inventory, and FIFO is giving you 1075. Cost of goods sold, FIFO is, you see, lowest, average is in the middle, LIFO is highest, right? But you see, the total available goods are the same, right? So total manufactured goods, including those sold plus the inventory on hand, total is the same. It's just the allocation of the costs, right? So what we have derived here, instead of just, okay, here we go. So up till now, what we have discussed the cases of the questions that are in inflation. So you see, prices are constantly rising, right? Like 16, 18, 20, and 21. So in this scenario, so when inventory costs are rising or when there is inflationary period, right? FIFO cost is COGS, cost of goods sold, is lowest because it is based on oldest prices. So you can just compare. So FIFO cost of goods sold, lowest, right? Ending inventory is highest because ending inventory is based on latest prices. LIFO is the opposite. Its cost of goods sold is highest, its ending inventory based on oldest process. So now when there is a deflationary period, when inflation is decreasing, when there is a decreasing environment. So earlier costs are 21 and now 20, and then it happened because this is market price. Market can, the raw material can be expensive, can be very cheap. So in this cases, it's going to be reverse. So when prices are decreasing or when there is a deflationary period, then FIFO cost of goods sold is going to be highest because that is going to be on older prices, and older prices are higher. Latest prices are lower. And FIFO ending inventory, EI, ending inventory means it is lowest. LIFO cost of goods sold will be lowest and its ending inventory will be highest. So this is the case when there is deflationary period. So you can say that when there is inflationary period, when there is inflationary period with prices are rising, FIFO cost of goods sold is highest, and when there is a decreasing or deflationary period, FIFO cost of goods sold going to be highest. So you can replace one another, or you can say that in increasing in cost environment, in inflationary period, FIFO cost of goods sold is lowest, and in deflationary period, FIFO is going to be treated as LIFO, right? So FIFO cost of goods sold is going to be highest. So you can just switch it up. Now, keeping track of perpetual inventory system. So it is impossible to apply LIFO unit cost to unit purchased and sold as a transaction or happened. We cannot apply LIFO in perpetual inventory system because it is impossible to apply LIFO on units to units basis because all the things purchasing and selling are happening on the same time. It's going to be very hard for us. So LIFO is more of the periodical, inventory based system. Average costing can be quite challenging because it requires sophisticated system. And if it is in perpetual system, then how we can find out the weighted average? Weighted average, we add all the cost and then we add all the units produced and then we divide it. But in perpetual system, everything is selling. We buy and sell on the same time. it's going to be hard. It's going to be very challenging for the software as well, right? Unless we wait for 1 day or 2 days. Okay, this day we only purchase, next day we only sell. In this kind of environment, we can keep track of this kind of stuff. But if selling and purchasing is happening on the same time, then it's going to be hard to maintain or to find out the weighted average. So many companies, they track only inventory quantities during the period, making adjustments, and then they want to see whether to apply LIFO or weighted average or other. So these LIFO and weighted average costing systems, they are applicable for periodic, like for those companies who are manufacturing based, those who have a factory. In factory, they order raw material, they take some kind of time to process this, to complete and finish goods, and then they sell it. So in that case, you can easily apply LIFO, you can easily apply weighted average costing system. So tax advantage of LIFO. So let me give you tidbits, a quick check to remember what's happening in LIFO and what's happening in FIFO. So if you remember LIFO, opposite is FIFO, you can easily remember that. So in LIFO, so focus on L, everything is low. Profit, low. Tax, low. Right? Cost of goods sold or ending inventory, low. Right? If profit is lower, it's because of cost is highest. Simple. You can easily remember that. Let me write one more time. LIFO. So focus on low, L, write down here P, profit, and then tax, and then ending inventory. I just write EI, and then cost of goods sold. So profit, L, low. Taxes, when profit is lower, of course, when you multiply 30% with the lower value, answer will be lower. Ending inventory, lower. Cost of goods sold, because sale minus cost, that's why profit is lower. It's because cost is highest. So in FIFO, you can just reverse it. FIFO, profit is higher, tax is higher, and ending inventory is higher, and cost of goods sold will be lower because profit is higher. Understand? So you can have, have a hint here. You can just, write it down, and it's going to help you out in remembering the characteristics of LIFO. Now, the tax advantage of LIFO. There is a clear, advantage of using LIFO, because if your focus is just to save taxes, then you definitely apply the LIFO costing methods, because it resulted in lower profit. When you multiply percentage with lower value, answer will be lower dollars. So when prices are rising, so all this scenario, what we have learned up till now is applicable when prices are rising. If prices are decreasing, then applicability of LIFO with perspective to save taxes is not going to be, not going to give you fruits. Why? Because everything is going to be reversed. So this happens